Welcome back, everyone, to this live session at Japan Investing Summit 2012. We have a real treat for you right now. I just want a couple of housekeeping items. This session is being recorded and will be available in our online conference area. Also, feel free to send in your questions for our instructor at any time during the presentation. You can do so by typing them into the online interface, and we will read them for you at the conclusion of the remarks. And with that, I want to turn it over to Oliver to introduce our instructor for today.
Thank you, John. I'm delighted to introduce Lorne Steinberg, the president of Lorne Steinberg Wealth Management based in Montreal, Canada. Lorne founded his own investment firm in 2009 upon the principles of value investing, and he has not shied away from applying that value approach globally, including in Japan, a market that he's intimately familiar with and has invested in for a long time now. Lorne has decades of experience in the investment business, and prior to establishing his own firm, he was the chief investment officer of AGF's investment council business in Montreal. Today, Lorne will present the investment case for his favorite current Japanese equity idea. So without further ado, Lorne, please go ahead.
Oliver, thank you very, very much, and it's a pleasure to be here, although I'm sitting here in my own office right now, but to be part of this whole presentation. I started off in the investment business in 1989, and in 1989 the Nikkei index was 38,000, and every firm, including the little firm that I was a part of, had a Japan fund. And even though the Nikkei was trading at about 50, 60 times earnings at the time, all the big brokerage firms from Goldman Sachs on down all talked about why Japan deserved to have a very high multiple, and it's a little bit reminiscent of the dot-com era where crazy valuations existed, yet everybody was interested. You know, we look at Japan today, and I started, reacquainting myself with Japan a few years ago, the Nikkei down about 80% or so, and we decided to run a screen using the technology that is available today but was not available to me many years ago on looking at are there companies in the world trading as Ben Graham golden opportunities, companies either trading for less than their net cash or net working capital. And surprising as it may sound, we found that there were most of the companies that met those criteria were trading in Japan. So we all know, several reasons for why the Japanese market has been so weak. One of the largest fiscal deficits in the world, if not the largest, depending on what numbers you use, maybe 200% of GDP. The most aged population in the world, and in fact, a population that is starting to decline because Japan has the same low birth rate as we have in the West. But has had a cultural aversion to immigration going back forever. And so investors who tend to favor that which is in favor have totally ignored Japan. And so when we look at Japan, we said, okay, given all of these issues that I've mentioned, and the fact that elderly people tend not to spend a lot of money, we would look for Japanese companies, see if there were values that existed in companies that were exporting, especially had operations, exporting operations in China, because Japan, given its proximity and engineering expertise, is actually the largest exporter to China. And we decided to ignore purely domestic companies for the most part, like a Japanese retailer, which was going to be stuck with an aging population and virtually zero growth. Brandis, the big U.S. value manager, did a very good piece. I wish I had written it myself. But they had taken a look at Japan and identified larger Japanese companies and took a look at the percentage of the market cap that is in cash in Japan versus elsewhere. And, you know, no surprise to us, Japan has a huge number of companies with massive cash positions as a percentage of market cap, which says two things to me. One, the Japanese market, you know, is given its huge cash position for so many companies, potentially offers a lot of value. And two, Japanese companies have always had, for the most part, an aversion to debt. So unlike so many companies in so many parts of the world that seem to spend every dollar they have buying back shares regardless of share price, levering themselves up to do so, Japanese companies truly are companies that are built for the future. So as we, you know, screened all these companies, we narrowed it down to maybe a list of 125 companies. Narrowed it down further because we really wanted to focus on companies that have very long operating histories, companies that are at least 40 years old, that are number one or number two in the world in their niches, that are truly global businesses, that are focused on engineering, that really have an edge. And that narrowed our list down further. And one of the companies we are extremely positive on, that we have owned for a couple of years, is a company that I had never heard of until we started this process, which is Ada Engineering. Now, Ada Engineering is almost 100 years old, and they've spent their history focused on metal form press equipment. And this has become a very high-tech area, used mainly by the automotive manufacturers, as well as consumer electronic manufacturers, air conditioning manufacturers, and the like. But automotive is truly their big market. And Ada, through an ongoing investment in R&D, has really become a state-of-the-art company. And they are truly a global business with manufacturing operations not just in Japan, but also in China, Malaysia, Italy, and the U.S. to serve all of their markets. If we look at the kind of the valuation of Ada, you see a company with a $380 million, I'm using U.S. dollar, $385 million U.S. market cap. Like so many Japanese companies, trading at well below their tangible book value. But what makes Ada somewhat unique to so many value investments in Japan is so many companies are trading at a discount to tangible book value, a classic Benjamin Graham value play, but have not been able to deliver earnings or earnings growth over the years and have very high price earnings ratios. Ada Engineering is a company with a very attractive price to earnings ratio. We priced to last 12 months is about 10 times earnings. Ada's year-end, like many Japanese companies, is March. So as we look forward to Ada, we look for quite a nice bump in earnings growth in the 13% level, and gives you a valuation, next 12 months of, 8.5 to 9 times earnings. A very big dividend yield of 2.7%, and I say big because we have to look at dividend yield, in relation to what is a country's bond yield. And as you probably know, 10-year Japanese government bonds yield less than 1%. Ada with a 2.7% dividend yield, very attractive. Sitting with, net cash, minimal debt, cash and investments of about $300 million. So an extremely strong, sound business with a great business model. So let me give you an idea of what Ada actually does. What they do is they manufacture parts of car bodies, steel and other metals, and they form it into the shape of doors and engines and other parts. And it sounds like a pretty simple part of the business, but like everything to do with manufacturing today, companies that are on the leading edge are focused on what do the companies they're serving look for, and what do the ultimate consumer look for, because that's what drives the industry. And we all know with the cost of energy and every company looking to meet fuel standards, there is a huge focus on how do I build it lighter, how do I build it using less energy, and ultimately meet all the global standards and be able to make it cheaper for the auto manufacturers in the ultimate manufacturing process. So Ada is very much a company that has, the beauty of so many Japanese engineering companies that really have no net debt is that in good times and bad, they are very focused on spending money on research and development to maintain their global edge and, really stand at the cutting edge of technology in their business. And Ada has done that admirably. They suffered in 2009-10 with the downturn, which obviously hurt global automotive sales. However, they used that couple of years to step up their R&D spending and come out of it in great shape, very profitable, raising their dividend, and also are making a big push into emerging markets such as Mexico, Brazil, China. They're already there, but that will become an increasing part of Ada's business because they help the manufacturers do what they do on a much cheaper basis. So, we look at Ada, and yes, it will always be somewhat cyclical because it's tied, in large part to the automotive business, but this is a company with a secular growth story because of the way they've emerged as one of the best in the business, and the fact that we expect to see some market share gains from Ada over the next several years, especially in emerging markets. And we look for a company that at the very least should be able to trade at its tangible book value, which is about a 50% bump from here, and be delivering, earnings growth in the area of 7 to 10% for the next several years out. And, following that will be increased dividends over the years. In fact, Ada's free cash flow, they're currently trading for about 4 to 5 times their free excess cash flow. So like so many Japanese companies, on every basis, this is such a compelling value story. For us, the downside is very limited. There's plenty of upside, and it's such a high quality business. And that's my presentation.
Thank you very much, Lorne, for presenting your thesis on Ada. I want to remind everyone, if you do have a question, you can submit it now through the online interface. I just have a quick question before we start. When you talk about the PE of 10 on a trailing basis and then around 9 on a forward basis, is that adjusted for the net cash and investments? Because it seems like there's about 200 million of net cash and investments. So
no, it's not.
So it would be even cheaper.
In other words, we haven't deducted the cash and investments from the PE. If we did that, of course, it would be trading at about 4 or 5 times earnings.
That's interesting.
So it's truly good. The reason we haven't done that is, hey, maybe Ada will make some acquisitions. They will make some small niche acquisitions, but we haven't even adjusted it for that to give as conservative a valuation as possible.
Okay, Oliver, I want to go to you. I know you have a couple of questions. Go ahead.
Thanks, John. Lorne, I was just wondering if you could talk a bit more about how the strong yen has affected them, and how do you see that going forward, also in terms of their production capabilities outside of Japan and what they're doing strategically.
Sure. there's no doubt the strong yen has had a negative impact on Ada like every other Japanese manufacturer. However, in the automotive business, and in this business in particular, Ada realized many years ago that you have to be close to your customers. So hence the fact that Ada has been manufacturing for many years in the US, Malaysia, China, and Italy. So therefore they've tried, and with increasing success, to match their production to their customers so the yen has less and less impact on their business. Clearly they will still benefit from, if and when the yen ever declines, but if you look at, where their manufacturing capacity has expanded over the last number of years, it's expanded outside of Japan. So Ada is really, it'll be exposed to the strong yen because when you translate, things back into yen, your foreign revenues are going to be lower. But in terms of the actual business, they really are less impacted by the strong yen than many other manufacturers.
Oliver, if I could jump in, I have a question that's...
And Lorne, I'm wondering...
Oh. Okay, go ahead, Oliver.
Sure, go ahead, John.
So we have a question that's
come in. Lorne, just...
We have a question that's come in from Terence Jang, and he is asking, could you talk a bit about Ada's competitors and how it's valued against them, both Japanese and foreign, if appropriate, and also competitive advantages and potentially any particular long-term production contracts or long-term relationships that may give comfort to your future cash flow estimates?
Well, first of all, Ada has, in terms of pure plays, a couple of major competitors are parts of larger businesses which are trading at, significantly higher valuations as one would expect. But what gives me some comfort is, and that's why I said one of the criteria we have is owning companies that are at least 40 years old, in this case much longer than that, is first of all, Ada is very tied into the Japanese auto manufacturers who are themselves global. And so these relationships, with Toyota as an example, go back decades. And, for this type of business, the Toyotas of this world spend a lot of time working with people like Ada in terms of in terms of communicating with Ada, what they're looking for, and how can Ada reduce the cost of manufacturing, having Ada do more and more work for them, as all of the big auto companies, as we know, are really focused more and more on outsourcing their parts of their production. So whereas, 15 years ago, Ada would just make basic metal form press equipment, today Ada is participating from the design stage in order to help Toyota, etc., truly design a car that uses Ada's capability to the highest level they can. Things like helping their customers reduce energy, storing energy, from a technological standpoint in the manufacturing process. But this is not a business with 100 competitors. This is a business with, probably globally, in terms of major players, 3 or 4 competitors. So, Ada has been a major player here for many years. Listen, as far as, what could go wrong with a situation like this, in the short term, not very much, but this is not a business. This is a business where you have contracts, but of course you are tied, somewhat to the auto cycle. Once, from a manufacturing standpoint, once you've tied yourself, once you've bought Ada press form machinery, that is not a one-year decision. That is a long multi-year decision. So it's not so much that the order book is kind of 1 year out, if you will. And I will say one thing I did not mention is that Ada's backlog is 20% higher at this point than it was last year. So orders are increasing, and that's, no doubt tied to the global, auto cycle improving, especially in North America and emerging markets, less so Europe. But these are long-term relationships because they fit directly into the manufacturing guts of the big auto companies.
And related to that, we have a question from James Clark. He's asking, are they tied to one particular auto OEM, and do they do business outside Japan with non-Japanese automakers?
The answer is no, they're not tied. They're not tied to, one or two major companies. They do business with 4 of the largest 10 automakers in the world, as well as other companies as well, that are tied, to that whole process. Sorry, what was the second question? The second part of that question?
Yeah, second part was whether they actually do business with any non-Japanese automakers.
They do business with non-Japanese automakers in the U.S.
Okay. And also, I just want to kind of clarify something that probably is clear to everyone, but when I first saw the word press machines, I thought, oh, something related to newspapers, but this has nothing to do with that, right?
No. This is taking pieces of metal like steel and forming it into the shape, for example, of the frame of a car door and other parts of a car. So it's got nothing to do with paper, but it's pressing the metal together, and that's where the term press equipment comes from.
Absolutely. Yeah, I just bring that up because,
absolutely,
we've seen a bunch of ideas where something related to newsprint, and then people just turn off immediately.
Absolutely.
There's another question from Georg Krech. Does management own shares, and are they focused on shareholder value? If yes, do they have any plan what to do with the cash?
The answer is absolutely no. Management, like so many Japanese companies, and this is a cultural difference that one finds, and let me be clear, we own over about 21 different Japanese companies. Japanese management, historically and today, stock options and owning stock are not anywhere close to the kind of compensation that we see elsewhere. So management does not have anything close to a significant stake in the business, number one. Number two, one of the criteria that I did not mention that we also focus on is we don't like to buy companies where there might be a controlling shareholder, and there is no controlling shareholder in this company. The largest holder is Dai-ichi Life, which owns 5%, so it's a widely held company. Japanese companies, in terms of holding cash, and one of the reasons we surmise they hold cash, and I've had this discussion, by the way, with many Japanese managers, many people who live in Japan, business people. Japanese companies, if you read a Japanese annual report, the letter to shareholders from the CEO looks completely different than the letter to shareholders from a North American CEO. A North American CEO will say, hey, we had another great year this year. Thanks to all our employees. We did a fantastic job. By the way, we took $2 billion of write-downs and lost, $300 million for you. If you read a Japanese letter to shareholders, it very often, especially after, 2009 and 10, when Japanese companies did not do well like the rest of the world, often starts off with, we had a 5-year plan 5 years ago, and here's why we did not meet our targets, and here's why, and here's what we're doing. These companies are run for the next 100 years. They want to be in business. The job of the CEO is truly to hand off to the next CEO a better business than he or she inherited, although it's usually he in Japan at the present time. And so when you ask about does management have anything they intend to do with the cash to improve the share price, my honest answer would be, the term "is there a catalyst" I don't think applies to most Japanese companies, because I would expect that Ada, like most of these companies, is comfortable holding a very large cash position because they want to be prepared for the next black swan or the next tsunami or whatever happens, and be able to not just survive but take advantage of those times when everybody else is suffering by actually increasing their R&D spend to get further ahead of the pack and better entrenched with their customers. So it is a totally different cultural mindset. A long answer to a short question.
Well, that's great, very insightful. And actually, since you bring up the 5-year plan and went a little bit more general, I have a general follow-up that I was hoping you could address, given your experience in Japan. We see a lot of these Japanese companies come out with these 5-year or 3 or 5 year kind of plans. In your experience, because if you take then the goal in 3 years, the stock looks just incredibly cheap. And I'm just wondering, is that basically a stretch goal, or is it more like a guidance? What's the batting average on Japanese companies actually meeting these 3 or 5 year targets?
First of all, the question is this a goal, a stretch goal, or guidance? I find that the goals being set today are done in a very different fashion than the goals being set 10 years ago or 20 years ago. I find 20 years ago the goals were even almost pie in the sky, and then they would get reset, and there was kind of no tangible reason, often it seemed, for those goals. Listen, Japanese management has evolved like managements all over the world. These people have gone to business schools and travel west and elsewhere, and so I find the goals today are based on more tangible reasons, not just what our goal is, but a lot of specifics on how we intend to get there. The reason most companies in the world didn't achieve whatever their targets there were because of the financial crisis, and Ada is no different. But I will tell you, having followed this company for a number of years, the stock is so cheap that even if they don't fully hit their goal, it's so compellingly cheap anyway. But I think in their environment, I think they have a better than average shot of hitting it, because they're delivering good earnings growth today and will do so, for the next couple of years, with European auto sales in a very, very bad shape. And so, our own, if we look forward and, expect Europe to kind of, improve somewhat, not back to where they were anytime soon, but improve somewhat, I think there's a good chance that Ada will be able to achieve, its major targets.
And we have a really good follow-up question from James Clark on Ada specifically. Is this, the equipment they're selling, is that a big piece kind of equipment you buy once, or is there a recurring aspect to the revenues?
Combination. Well, first of all, it is a piece of equipment that you buy which requires servicing and specialty with each manufacturer. So there is an ongoing service side which is increasing. The recurring revenue stream for Ada, if you look at over the last 5 years, is becoming a larger and larger part of Ada. That is really a reflection of auto manufacturers looking to outsource more and more of these processes. So it is equipment that you sell, but then it's equipment that needs ongoing service, and then companies' models change every year. That requires tweaking. So it's a business where you're very entrenched.
And related to that, is there a distinction between bookings and revenue? Do they disclose backlog or signings or anything of that sort?
Yes, they do. They disclose their. One thing about these companies in general is you don't get 100 press releases a year. You know, with a lot of U.S. companies in the IR departments, every time there's a signing, it's another press release. But Ada does disclose its backlog, and its backlog is a little over $700 million, which is up 20% over last year. And that is a reflection, although they don't break it down, that is a reflection of an improving economy, you know, in the U.S. and several other parts of the world, combined with increased orders from some emerging markets where they are gaining market share.
And it looks to me like 700 million, that's about 1 times annual revenue. Is that roughly?
Correct.
Okay.
And that's what the order book will, you know, people don't place orders 5 years in advance in this business.
Got it. I want to go to Oliver for another question. Oliver, please go ahead.
Thanks, John. Well, great presentation. I'm just curious, I want to tap again into your vast experience in Japan, and you mentioned you have 21 companies in your portfolio that are in Japan. Curious just if you could give us some sense of, you know, are there any themes across the portfolio when it comes to Japan, or give us some more sense how you generated or filtered down to these 21?
Sure. First of all, let me tell you what Japan is good at and what they've not been good at. We all know what I call the big uglies, like Sharp, Sony, Panasonic, the you know, the consumer electronic companies that, you know, 25 years ago were in some ways, you know, cutting edge and in all of our living rooms. Today those companies are all suffering. Japan, I find, Japanese companies in general have not done a very good job in the consumer sphere of being able to change quickly and meet consumer needs. However, where Japanese companies excel is in the intermediate part of the process. For example, in the smartphone, which, you know, one carries in one's pocket, about 30% of the components are actually made by these wonderful niche engineering companies that, you know, do things like things we never think of. Companies that put coatings on chips that go into a smartphone. So what we've really found is that there are so many great public engineering companies in Japan that you never hear of before, because they're simply dealing with manufacturing companies and have either patented processes or are integral parts of little pieces of the assembly line. And, you know, that's why, you know, I'd never heard of the companies we own until we actually looked at them. We actually, in fact, also, by the way, just as part of our research, you know, we will speak to the companies that buy these parts, and the CEO of most of the companies that buy, you know, parts like are never going to know these companies. It's going to be the manufacturing side of the business that can really give you insight into, you know, which companies they respect, how long they've been dealing with them, and why they're dealing with them.
And Lorne, I'm curious if you could just tell us a bit more about where one could, you know, see your portfolio in terms of the other companies, if our audience is interested, just to find out about some of the others, whether they're disclosed or how one would go about.
Sure. First of all, anybody's free to send us an email to ask that question, because on our fund fact sheet, we disclose our 10 largest holdings, but we are a transparent firm, so, you know, once a year we do publish our whole fund, and they would find that on our website at
Great. And I'm curious also. and I think we have that on your presentation as well. In any case, Lorne, I'm wondering also if you could tell us about the disclosure of some of these small caps. It seems to me that a lot of the foreign investors are familiar with the behemoths such as Sony and Sharp that you mentioned, but they're not often the good investments. And but when it comes to these small cap Japanese stocks, the disclosure tends to be very weak. And if one doesn't speak Japanese, could you share with us perhaps some of your favorite resources or how you go about doing Japanese investing from Canada?
Sure. First of all, ADA happens to have much better disclosure than most. ADA publishes a full-on, 68-page English annual report. So ADA's disclosure is good, but I will tell you, when we started this process, we had to hire a Japanese interpreter because a couple of things, Japanese companies, as we looked at many of the companies we own, used to publish a lot more in English. Several years ago, there were some buyout firms that tried to go into Japan because they saw the values in Japan and got very aggressive in terms of trying to take over Japanese companies, and they were rebuffed. It appears to us around that time a number of Japanese companies stopped issuing reports in English. Now, I don't know if the reason for that is they're trying to be less attractive to foreign investors or not. I have no idea. It's just something we noticed. But we happen to use, in terms of numbers, a software program called Capital IQ, which has allowed us to, which gives us all of the long-term data, the current earnings, and all the numbers that you would want. But I will say, to complete our research, we can't buy a company unless we can read their filing in English or have it translated and know what's actually going on, so that we don't end up buying something that looks cheap but ends up having a huge environmental problem or a huge lawsuit, as an example. So some companies are, like ADA, are excellent in terms of, here is the whole filing that a Japanese person would read, and some of them, unfortunately, not available.
We have a question from Graham Cunningham. He's asking whether you believe company visits are a useful thing to do in Japan. Is there anything you can get from that you can't get out of published reports?
That is an excellent question. And it's an excellent question for a couple of reasons. One, I find company visits in general are less useful than they used to be in Western companies because of the requirements on fair disclosure. Not that that's not a good thing, it's a great thing. But management now in general is very reticent to give you any special insight without their lawyers sitting beside them. Japan is a country which culturally is based on long-term relationships. I have met several Japanese companies, a number of them, and I will tell you that and this is just an observation from a Westerner who's done a lot of reading about Japan, is that a first meeting, perhaps with a Japanese company, is going to be a kind of a formal meeting. I don't think one is going to get any insight. At least, let me say that I haven't gotten any insight on a first or second meeting. It's very much a getting to know you meeting. And it takes time to develop relationships. Also understand that unlike, companies, in North America, as you speak to investor relations people, and I speak to many, and I count several of them as my friends, as they tell me, Lorne, my job in investor relations is to sell the stock to you, so that you will buy it and the stock price will go up. Then I'm doing my job. In Japan, that is truly not the focus. So I certainly think that, it's very, very useful to meet management, to learn about the company, and you will learn about, inner workings of the company. But in terms of kind of getting those, little pieces of insight that will give you a conclusion about, hey, this is a great management team or not, unfortunately, I don't think it's going to help that way.
And we also have a question from Giulio Battisti. He asks, do you take into consideration bad quality companies at a very good price? Ada seems like a pretty good business actually, but would you go kind of down the quality ladder if you got some ridiculous bargain?
I will tell you that the answer to that question is mostly no, only because when I look back at the mistakes I've made in this business, and the beauty of this business is no matter how long you've been doing it, you seem to find a mistake every now and then. The biggest mistakes I've made in this business are buying something which was not of great quality, but which looked so compellingly cheap I bought it anyway. My proviso is I'd be more interested in something which perhaps had less quality if it had a bulletproof balance sheet and no debt. But if there was too much debt involved, we would tend to just stay away.
Well, thank you very much, Lorne. I think with that, we're going to wrap up the live session. I want to remind everyone you can submit your questions to us by email to hosts@valueconferences.com or in the online conference area. We're also always happy to introduce you to the instructors, so if you want to follow up directly, I'm sure Lorne would love to hear from you as well.
My pleasure.
Thanks again, and we look forward to having you join us for our next live session, which will start in about an hour.
Oliver and John, it's truly a pleasure to be part of all this. You guys do a fantastic job.
Well, thank you so much for the wonderful idea you shared with us today, Lorne.
Enjoy the rest of the conference.